This is an intro video that is designed to help show how to follow along with the morning videos. First of all, this is not financial advice. Nothing that I say is to be understood as a recommendation to buy or sell. This is not a trade plan. If you need financial advice, please go find a financial advisor, as this is for educational purposes only. What these videos are about are identification of the directional bias based on potential turn levels. That is, bias can change. Your directional opinion can change depending on how price reacts at certain turn levels. And what do I mean by that exactly? If you look over here on the hourly chart, what I mean by that is how prices close, how hourly prices close against the identified levels, and the patterns that form in the price swings, the hourly price swings against these levels. How the hourly bars react to the levels can either confirm or invalidate your directional bias, the opinion that prices are either up or down. So please understand that a upside directional bias for today may be invalidated by how the hourly candles react at a price level. We're going to go over what is on the charts. We've got three charts. One is a weekly candle, where each candle is a week. Another chart where each candle is a day. Another chart where each candle is an hour. On the hourly chart, we have 24-hour periods that is designated by these vertical dashed lines. The hourly chart is a 24-hour chart, so we have extended hours in here. The second thing to note is that we have three classes of lines, or three colors of lines: the gold lines, the blue lines, and the red lines. The gold lines are larger time frame swing levels, and if you look here on the weekly, you can see that we have a price swing that goes from here to here and is outlined by these dashed gold lines. If there's a pivot swing which is outside of the current range that the price is in, then the line will be solid. We also have blue lines, which are the 50% markers of those levels. So from here to here, we've got a 50% of that range is a blue line. And from here to here, we've got a 50% of the range, which is this blue line. If you look down here at the daily chart, you can see why it is that we laid a gold dash line here, because we've got the daily range here. Now, why do we designate this range and this range? Well, those are the ranges that the current price action is inside of. So those are the ranges that we care about and will mark with these gold lines and these blue lines. Now, the red lines are smaller range designation. This red line is the coming up here to the weekly, this red line is the halfway point of this weekly bar. Down here on the daily, this red line is the halfway point of the range of this daily bar. Here you can see two other little red lines on the smaller range days. If we look over on the hourly, those smaller lines can be found right here. So those are the types of lines that we use, and which we watch how hourly prices react against those lines. The last indicator that's on the chart is this indicator over here on the hourly chart. And all we've done is we've overlaid daily bars right alongside the hourly bars, so that we can quickly reference side by side the daily and the hourly potential edges of the bars and levels of each bar as we go along in our analysis. This quick intro does not include any concepts about how candles form and how they close and what that means, and how patterns on an hourly chart, swing patterns on an hourly chart form, and what that means. That understanding is expected to be already known in order to be able to follow